price of steak versus hamburger is an early sign that the economy is shifting. When you kill a cow, you get both. You can charge a lot more for steak, though, than for hamburger. And right now, that differential is shrinking, which is an early sign that we're headed for very unusual economic times. So what can leaders in fintech do to thrive? I'm a rational optimist, and I know that we're on the brink of what is called a 90% economy. And what that means is that we will not have ever in our lifetimes experienced what we're about to go through. So any 5-year plans, any strategic plans that you've got on the shelf, all bets are off. We all know the same things, that what's up is esports and Zoom, but so is unemployment. And digital health is up. People who make boxes are thriving. Lego's thriving. Clorox is thriving. Amazon's thriving. Touchless payments are thriving. Government debt, unfortunately, is also up, and so is bankruptcy. What's down is tourism. We know that universities, real estate, branch banks, GDP, urban transit, mental well-being are all down. So what do we do about this? What do we do now? And I would say that the first thing we have to do is learn to read the change. We have to be brilliant at it. Number 2, we have to be insanely skilled at shifting gears. And number 3, we need to be inspiring, because we need to be fully committed that we've got this. One of the things that I know from my role at Futureproofing Next, because we help companies get through these inflection points, there's always someone who does well as the seesaw changes. So we're observing things like what will happen to call centers as people work more from home, the touchless payments that was such an obstacle just a few months ago, and now virtually overnight, those obstacles have gone. Flexible work, upskilling. So what do we do about all of this? At Futureproofing Next, in conjunction with a global community that we work with called the Gray Swan Guild, just did a pulse check of the American and the global opinions about this. And we talked to business leaders. What people feel like is that after we recover from the first stages, we'll still have some longer term issues with the workplace and the employment and with the global economy. And some of these things we think are longer than others. In other words, when we asked the sense makers to weigh in on some of these key debates, what we found out is that 68% of the people think we're still going to work from home for a fairly long time. And they also think that there's a strong disagreement that will reach equilibrium by next January. In Futureproofing Next, we think, okay, you have to see differently, learn differently, decide, and really commit. This is what we think you can commit to, things like this. We read about this company, Lunar. We don't know them, but they're part of the community that now has an exclusive financial partnership with Astralis Group in the Nordics. Why? Because they observed, I'm sure, that the changing downward and the changing upward of that seesaw yielded an opportunity. And seeing ahead, you can see that if esports is going up, in what ways could the financial sector and the fintech groups serve uniquely to bond with a community that's diverse and committed, and to provide financial services in a really creative way? And the reason that partnership worked, and we believe that this is what all of us should do, is think about this. Who can we partner with to think about what's going up in the world economy so that we as fintech leaders can be ahead of that, serve it, support it, and thrive? So what should you be committed to in times like these? Well, first of all, we know that just like with esports, if you've got this connection to the tribe, this connection to a very loyal group of followers and customers, that's the heart of everything. And right now, fear and uncertainty are huge. And so the financial sector can do a tremendous amount to fix that. Right now, trust is today's currency. And how can we as fintech leaders really change the face of fear and turn it into feeling much safer. We also know that there are some gray swans. And as we've been looking at the pandemic and all of the economic issues related to that, a gray swan is something that might occur, but not necessarily with an ability to predict it, and not necessarily very often. So we looked at Google Trends and what has been going on with the pandemic. And we're really surprised in a way that the pandemic attitudes and the searches around the word pandemic have been steadily going down. But at the same time, and I live in the United States, and there's also at the same time a gray swan that is part of the overall global economic picture, because the term racism has been going up in trends. So what do we do to connect with communities authentically and be financial services leaders and fintech leaders? Who do we partner with? How do we connect with people so that they know we're together? I was very impressed on a recent webcast that we did with Amy Dawson from Visa, who went out into the market, which is one of the things that I recommend we all do. You go out and you talk to your customers, and you know that you've got to listen carefully, because right now, according to Visa, and this is public information, cash and currency concerns, financial security, there aren't any good solutions. You're trading off something like more expensive delivery for the fear of going grocery shopping in a store. So to quote Snoop Dogg, you know, with my mind on my money and money on my mind is a theme that they unveiled in their original research. What can we do as fintech leaders to do our own research and find out what are the pain points that we can work on and what are the jobs to be done today? So we think finally the third part of this is that we have to be inspired. We have to commit to earn trust forever. And I believe we should lead movements, no matter whether we're the David or the Goliath, because I believe that we have agency over the future. We are not victims of these news headlines. We are leaders of organizations that can shape our future. So what we think is that we can, of course, use at the bottom of the pyramid back to work initiatives. Going a little higher, we can redesign our work. We can reimagine the future. And what would it be like if we as fintech leaders did what Lunar and Astralis Group did? Create liaisons, partnerships, and bedfellows so that 1 + 1 is 3. And there's a greater vision for a bigger future together. So can you see differently, learn, decide, and commit? Well, yes, to lead a movement, this is a book that we recommend. We recommend that you read the book Cascades and come forward and lead these movements. Get brave, get inspired. And there's also a great book called The Forever Transaction, which talks about companies like Peloton and Netflix that have developed ways to be so loyal. I mean, 89% of companies that have forever transactions as part of their business model stayed in business and afloat during this pandemic. We recommend that you lead a movement and that you work on forever transactions. So finally, do this now. What do you have to do? You should shift to the upside of the seesaw. If esports is up, how can you play a role in what's going up? If customer conversations need to come from us, we need to find out about our own customers. And finally, what do we do to earn trust forever? And I think we should lead a movement. At Futureproofing Next, we are very committed to companies being able to get ahead of any change that happens and preparing for that. And so we study the future of finance and work with people to figure out what the future might be and how they can bring their best game forward. We know that there's proof that people have done this. We know that in the 2008 financial crisis, people were either founders, phoenixes, or failures. And out of that, the fires and flames of the 2008 challenges came Venmo and Cloudera and other companies that thrived. So the question is, what are you going to do to lead a movement, to future-proof, and to really develop a new path to growth? Let's do this.
All right. Thank you so much, Andrea. That was really illuminating, and I think a lot of those points are super timely, especially in today's day and age. So you know, what can we do, you know, being fintech entrepreneurs and fintech leaders? And I really thank you for sharing your insights. So what I'd like to do next is, you know, begin our panel line. So the first panel that I'll actually be presenting is on the topic of automation tools accelerating innovation. And who will be joining us is Liz O'Sullivan, who is the co-founder of ArthurAI, as well as Yali, Harari, co-founder and CEO of Innovesta. So at this moment, I'll open up the line to them both, and we will begin. So I guess let's start with our first question, just to open it up to the audience. How about you, Liz? Can you please share your background and just tell us what you do and who ArthurAI is?
Absolutely. Thanks, Diane, and thanks for having me. It's great to be here this morning, and just a little bit about our background. So my name, as Diane mentioned, is Liz, and I've been in the New York tech community for about 9 years total, spanning a variety of different companies, most of which have been in the AI space. Most recently, I was working at a computer vision company where I headed up their annotations team. And now ArthurAI is a AI monitoring platform, or a model monitoring platform. And essentially, our platform exists because of all of the battle scars that we've had over the years deploying these large-scale statistical models into systems that are increasingly complex. And we've seen all of the different ways that these models can make mistakes, often in an unexplainable way. And so our model monitoring system is a more proactive way to approach responsible technology and responsible AI to make sure that you're not losing money or discriminating against various groups with AI-powered bias, and that when you do make decisions, no matter what kind of model you're using or to what purpose, that those decisions are explainable, transparent, and easy to audit.
Awesome. Thank you so much, Liz. And same goes for you, Yali. Please tell us a little bit about yourself and Innovesta.
Thank you, and thank you for having me, and thank you, Andrea, for this amazing keynote. So my name is Yali Harari, and I'm the CEO and co-founder of Innovesta. I'm a mathematician born in Israel and now lives in New York for the last 2 decades, and developed Innovesta after many years in the ecosystem, running companies, a GP of a social impact fund, but really found out that the world needs automation to allow many organizations to know more about the non-public assets we deal with, whether we're investors or we lend them money or we procure their products. Nobody just buys IBM and Cisco anymore for many, many years. So we developed an AI-based platform that knows to collect and categorize everything about a company, whether it's a small company or a larger company, but it's not public, external internal data sets, and understands risks and early warnings and what's going on in the outside world about this company, about your critical supplier, about your portfolio, and have the ability to have early warnings and gaps and compare to competition. A lot of things we want to know, especially with everything that's happened lately. We added a risk layer 6 weeks ago because of the pandemic, and trained our machines to understand how resilience and how what's the best way to understand what's going on with your portfolio. Where should you be focusing on? And the COVID-19 resiliency layer really gives a picture of all the interconnectivity, global and local, that we all need to be in the know now. So if it was just nice to have or for data savvy organizations, now it's really for everybody. And I love that, Andrea, what you said about read change. So, we all agree with that, I'm sure, on this call and many more people, but how do we really read change effectively? So at Innovesta, we hope the pandemic health crisis is going to pass, but the need to have visibility, because it is resiliency, locally and globally, is what we think is a must now, and we've automated, whether it's a pandemic, regretfully now racism, and the world is going in different ways, and we want all of customers to know everything about crises. So that's what we do, and I'm so happy to be here.
Thank you so much, Yali. I think we definitely could agree with all of those points. And I guess back to you, Liz. What do you feel makes ArthurAI so innovative? What is that breakthrough piece that you feel like is what what is kind of changing the landscape for some of these customers that you're doing explainable AI for?
Great question. So, the last 5 years, we've seen this really steady increase in how companies are thinking about AI, and only in the last maybe 3 or 4 deploying it. And they're doing it in a really kind of ad hoc way, especially if it's in an unregulated industry. But even within the financial services, regulators are tasked with creating these frameworks that are maybe, sort of as little intrusion as possible, but that are still robust. The problem is that AI works differently from the typical model, and can have a lot more problems that are difficult to find and that are lurking sort of underneath. And so now we've gotten ourselves into a situation where these large corporations have deployed models that are making decisions that no one can understand and that are probably discriminating against people, since all models are biased, and we all know that in the space. But they don't have the right kind of oversight to understand that they're losing money, right? And their models, when they drift or when things are a little bit less accurate, when the world changes, for instance, like we're seeing right now, you may not know exactly how that's going to impact your model or why they'll make new decisions that they do make. So we do believe in automation. We think that it stands to make the world a better place, and especially in finance, to help people get better terms for their loans and more accurate alternative credit sources and things like that stand to benefit unbanked and underserved parts of the population really well. But it's most important that you are able to deploy these automation tools in a way that won't put your business at risk, either through racist or discriminatory decision making that may be illegal through existing laws, or even preparing for the new laws that are bound to come about with regard to AI, and a bunch of legislation has already been proposed. So our platform really allows corporations to take that step to increase the amount of automation that they have, while at the same time making sure that their risk is managed in a mature and in an essential way.
Awesome. And I guess, from your perspective, Yali, what do you feel like is that secret sauce of Innovesta? What makes you guys super innovative? What are clients actually saying that, you've really been able to do X, Y, Z to help us move forward and get to that next level of what we would like to see in companies?
So the best definition that we actually tagged, but the customer told us, is that we unlocked for them, excuse me, the DNA of the assets, the non-public assets they're looking at. So they understand more where the company is, what are the sentiments, what's going on with it, how are they compared to competition. And they could make better decisions by incorporating our scores and our data sets into the Arthur models, checking it through, Liz, your system, and then making better decisions. But the ability to see the world around the company, not as a report, but as something that's their way of, that's how they want to see things, that's their method, that's how they train our engines to be their view. So it's their system and how to see the world and dynamically know everything that's happening that they feel is important to them. So they're not in hysteria to know more and no tools to figure it out. And I think that's what we've developed 3 years ago before the pandemic. But obviously now I think, again, everybody wants to know more about every business relationship you have. And I think more and more we'll see businesses needing support from financial institutes in different ways. And how do you make those decisions and how do you stay in the know? So I think we unlocked something that wasn't there before.
That's great. So I guess let's take it back a little bit to think about the macro of this all. So how do you think AI or machine learning or any type of, I guess, automation type tool is really driving fintech innovation specifically? And when we're looking in this environment, in the backdrop of a pandemic, how do you feel that it is really kind of driving this sort of change? And I guess we'll start with you, Liz. How do you feel about that?
Well, at our core, we're an AI company and an explainable AI company. And so what interesting is the way that these models are trying to predict future conditions to enable powerful business decisions to be made, whether that's staffing or revenue forecasting or, even just your ability to collect on the outstanding debts that you have. Nothing today looks the way that it did yesterday. And so it's a real opportunity for AI to come in and to revolutionize some of the existing processes that are all needing to be rethought. And so we are seeing, especially in areas like collections, where you maybe have these large, groups of people in call centers that maybe aren't able to gather as easily as they were before, being augmented to at-home teams that have some sort of supervision and some sort of predictive capability to identify where the opportunities are within your portfolio of people that you need to call. And that's just one example. So businesses everywhere are having to get creative, and predictive modeling can go a long way to do that. The unfortunate thing is that predictive modeling, especially the really powerful kinds, really find ways to cheat. And there's an infinity of stories that we could talk about where you have a model that you think is doing really good work and you think it's outperforming a human, but in fact, it's just figured out a workaround that is not actually predicting on the elements that you want it to be predicting on. So there's a lot of blind spots that people can really fall into. But what's really exciting is that people are starting to understand that not only is this predictive modeling our future and that it's really necessary, but that they can't take this lightly, and that there are a lot of things that could go wrong and do go wrong. Which is why we sort of had last year in 2019 was sort of the summer of AI ethics. But now it's really heartening to see that really academic excitement filter into the corporate world, where they're starting to realize that they need to build or buy tools that are going to help them make sure that they don't take on way too much risk.
Yeah. And I guess, same goes for you, Yali. How do you feel about this, from a macro standpoint, that AI or machine learning is driving fintech innovation specifically, and more importantly in this environment, how will it really improve things when hopefully we're all done with this, when we're kind of seeing the light at the end of the tunnel, right?
Right. So I think we all feel with our customers, the pressure where they're at and the need to be agile, but what does it really mean? And so on one hand, there's the transaction level where AI can help and can make mistakes, as Liz pointed. But on the other hand, how do we mimic? And I think AI has a big role in that. How do we mimic decision support? And how do we take intuition or things we knew how to do, or we could figure it out, or we sensed it, and that it's no longer possible because of all the different traffic and transactions everybody needs to look at and the changes in those transactions. So I really, I see, again, the need of knowledge was always there. I think the need to understand how people think, and on the decision support level, how do they see how they thought and how they can tweak it to make it ethical and right, but really how to collect it to bring it to them, and without cutting off the human element. At Innovesta, we don't believe we'll forever cut the human element, and nor should we, but we need to be able to bring enough effective tools to create the thinking, and beyond just I'm feeling it, or I know why I invested, or I think it's going to be great to give that person a loan. So we see a lot of pressure. We see the need for agility, and I think the next level of AI that combines how people really react and think and how they train AI engines, not just by transactions, but how they think, is the next level that this pandemic, regretfully through a lot of heavy price, got us to,
Yeah, I would say that we're kind of trying to do things a mile a minute to keep ourselves moving, keep ourselves afloat, and actually move ourselves forward. So I guess are you seeing any fintechs or financial services companies adopting automation successfully? Like, are there any use cases? Do you know any companies specifically that you can point to for that? And we'll go with Liz for this one.
So it's really tricky asking me about automation when it comes to AI, because to a certain extent, you really want to have good automation. So I would say like the most mature organizations that are doing AI have some degree of automation, but what you really, and as Yali mentioned, it's not enough to say, set it and forget it and walk away. You need to have human intervention in the loop as well. So interestingly, I would say the most mature organizations that we're working with, and these are Fortune 100 healthcare companies, financial services, banks, all of the big ones that you might assume, they don't rush to have complete automation. And some of the credit card companies that I've seen, especially in lower leverage areas like personalization, will have what we call automated refit and redeploy mechanisms for their predictive models. So do we think that this person would enjoy this ad or this financial product that we're trying to recommend to them, you know, based off of their behavior and their clicks? We can learn a little bit about this person and then maybe create a new model by resampling data that we have in our vast, you know, warehouses of data, and then training a new model to deploy it really fast. This is exceptionally rare. I see maybe the top 1% of financial institutions doing things like this. But, you know, in those cases, it's you know, especially evident how much more ROI you can capture when you have something tracking the accuracy of these really complex automated processes. So pretty soon we'll be able to disclose our client names, but it's not quite this moment right yet.
Got it. All right. Well, thank you for that perspective. And I guess we do have a question coming from the audience. And I'll give this to you, Yali, but I'm not quite sure how much interaction you have with DLT. But William Friedman asks, it would seem that there would be some synergy between AI and DLT, digital ledger technology. And yet there are few projects that bring experts in these two fields together. Do you know of any promising AI DLT projects, and can you think of some use cases? I know this is a really tough question, so you know.
I mean, so the answer is, you know, it's a complicated question, and not just because it's not, you know, Innovesta doesn't deal with that, but we're being asked that in many cases, and so I'll refer back to you, Diane, but I don't know on the top of my head of like great tools right now out there, but I think the combination will be a must.
Yeah, and I you know, I was actually struggling to even think about it myself because, you know, as you know, AI is not new, but it's also complicated to actually get right. You have to constantly you know, do this and check your tools and making sure that they're doing this accurately, consistently, and so I think that DLT being as new as it is and combining the two is actually quite complex. So I do understand, the you know, the thinking behind it, but also it's quite new. So this might be something into the future that we might see, but not quite yet. So I think you know, if you have any final thoughts that you'd like to share with the audience as we conclude our panel, I'll share that now with Liz, starting with you.
Yeah, I would mention, I think that this, you know, and not to be the relentlessly optimistic person here, but, you know, we're all dealing with a vast change in society. We should all be realistic about that. But any big change is an opportunity to rethink existing practices and to understand what you're having that's working and that's resilient against this kind of an event, and what you have that is not. And the things that break, while they create headaches for us and more work to do, are things that you should always be looking at in terms of your ability to automate those things and to take all the data that you've collected along the years. Banks have, you know, an infinity of data, which is just an excellent resource for any company that wants to get into AI. And think about some creative ways that may not be as straightforward that still maintain human operator oversight, but again, leverage these like off the shelf or easy to access open source tools like TensorFlow and scikit-learn. You know, the talent pool is growing and there's a lot of really incredible talent on the market right now for various reasons, but you know, it's a good moment to kind of rethink your whole strategy and put things like AI and things like automation in a responsible way at the forefront.
Awesome. And I guess let's go with you, Yali. Any final thoughts for the audience?
So again, I'll piggyback on Liz and be also an optimistic. I think, although it might be overwhelming at the beginning, but the word strategy and risk management and business continuity have, you know, leapfrogged through crisis. And I think there's another leapfrog coming right here and now, because the ability to understand more and figure out how do you become a real agile, resilient enterprise. And how do you understand what will get you through crisis you can't even define or imagine is something that the organizations get to do now. And the ones that will do it will stay on top of the game no matter what comes their way. It has to do with how you treat employees and how you treat customers and supply chain and you know, your core processes. But it's no longer just to make a plan if something that we already experienced will happen again, but it's really how do you get agile in that level. And I think, first of all, it's really interesting and real leaders will shine. And I think, you know, all of the people on this panel definitely get to play in this game and, you know, get the movement rolling.
Yeah, so one question that we got through the chat, actually, so please put your questions in Q&A, was from George Yaryura, and saying that most financial institutions have an awful data architecture and completely siloed. So how do you plug in AI into that in an ROI efficient manner? So Yali, I wonder if you know, you have any thoughts on that.
So our engines know how to take very quickly data from the outside world and as well as from existing data sets in a different contextual multi-machine approach. So it doesn't take us too long, or the integration is not the traditional one we've been used to on how we, you know, we create the DNA and the skeleton of the asset is different, and makes it a, you know, from very, you know, a couple of days to a couple of weeks implementation to start seeing things, and then training the engines, and they become better and better as they go. So yes, it's been a problem, but there are ways of how to analyze what's in there and just pick up what's relevant instead of churning the whole thing.
Awesome. Thank you so much, Yali and Liz, for your time. That will conclude this portion, this panel for automation tools accelerating innovation. So thank you so much, audience, for your questions, and we're just going to move on to the next panel. So if you just turn off your cameras as we move on, I'll be introducing our next panelists. We have Kirti Naik, CEO of Tikka Solutions, and Niharika Shah, CMO of TIFIN Group. They will be speaking to us about achieving immediate ROI and growth hacks. So please, if you will both turn on your cameras and take yourselves off mute, we can begin. And just as a FYI, Brian, I see your question and we'll be answering it during this panel, since I think the two will be most equipped to be talking about these topics. So let's see, great. All right, guys, thanks so much for joining us. So we'll just begin with Kirti, and just to share your background, please, for the audience and what you do at Tikka.
Thank you, Diane, and thank you, Angel, and the whole FinTech Connector group. I'm really excited to be here, given our just really, I'll call it emotional and crazy times for us, but it's great that we have a community that we can all kind of come to and still keep ourselves intellectually stimulated. So thank you for that. So Kirti Naik, I am CEO of Tikka Solutions. We are a boutique brand content outsourced CMO agency, and we really look to serve small to mid-growth companies that are really trying to pivot, transform, or figure out how to create long-term growth strategies. And we do it all through a lens of customer experience, marketing automation. So it was great to hear from Yali and Liz just now. Can relate to a lot of what they are pushing out there, and there's an opportunity for marketers like us to leverage it. I come from a background of 20 years as a marketer, brand strategy, integrated marketing. I've worked in manufacturing and entertainment, but the bulk of my experience has been in consumer banking, asset management, and then most recently in blockchain securities. And I took so much of my learnings from the inside of these very big brands, from Citibank to Oppenheimer, Russell, to really figure out then, like, how can small to mid-growth companies leverage a lot of what these larger, amazing brands had an opportunity to do. And so our goal is to really bring those best practices to these type of companies. And Diane is actually also a part of Tikka, so thank you, Diane, for all you do to support us.
Oh, thanks for the shout out, Kirti. And over to you, Niharika. Just share your background and a little bit about what you do at TIFIN in general.
Of course. Thank you for having me, first of all. And I'm glad to participate alongside all the other amazing women. I do believe the last 15, 20, or 30 minutes has been quite very interesting. So in terms of background, I am CMO of the TIFIN Group. The TIFIN Group is a fintech studio. We start, invest, and operate fintech companies, sort of sitting on the verge, and the way that I describe it is we put the fin in fintech. So as we've talked about, automation started off with basically making things that we did faster and better, but how do you incorporate? Now I think the sort of third leg or third evolution of fintech is incorporating intelligence that is informed by deep financial expertise to actually enable things that couldn't be done before, and to help people, whether it's advisors, asset managers, investment managers, etc., become more powerful. So as of today, TIFIN has about 6 portfolio companies. So I run marketing and communications across the portfolio. And previously, I was Chief Brand Officer for Prudential. I was there for 9 years and ran brand and marketing there.
Awesome. So I guess, what are some tactics that you use, Kirti, to recommend helping your clients grow and do that quickly? I think right now, given the backdrop of the pandemic and what is going on, just in general, like all of the things that we're kind of looking at from the financial side, from the technical side, from a social standpoint, I think people are, I guess, they're having a hard time making their brands be heard and doing that the right way. So outside of just, showing that, to the world, they also need to grow, right? So what are those kind of tactics and recommendations that you would advise some of those clients?
That's a great question. And I think Andrea really hit the nail on the head in her keynote, when she talked about that, we really do need to focus on gaining trust. And I think especially as newer, younger companies that are entering the market, whether you're traditional kind of banking offering to fintech or offering a SaaS type of software, I think you have to be authentic. That really is going to be the way to gain trust amongst your buying market, whether it's B2B or B2C. And really that comes down to, let's step back and look at what is differentiated about your offering. A lot of clients that we're talking to right now, they're actually coming to us saying, I'm another SaaS company and I do X, Y, and Z. And it's like, okay, that's great. You're another SaaS offering, but why? Like, do you understand the needs of your customers? Have you taken it into account when you're creating that product or service or idea? And so I think it really has to go back to some of that just foundational thinking of, let's make sure we're offering the market something it first of all wants and needs, and having some of that sentiment in mind when you're going to market. Number 2, I think you need to be able to tell your story properly. I think we're often victims of talking to ourselves in a lot of jargon and thinking everyone understands. It's like, oh, I'm on the buy side, I'm on the sell side, I'm on this side. Okay, so what? What does that mean for me? What is that going to mean for me if I'm on the investor side or the consumer side of the spectrum? So I think you have to be really diligent at creating that very succinct, clear story. And then number 3, I think everything should always ladder up to a corporate strategy. And so it's essential from a marketing standpoint that whatever you're thinking about going to market with and positioning, that it really ladders into up into your corporate strategy. And so you shouldn't be wasting time just trying to spray and pray, for instance. You need to step back and say, okay, it's important we build a community. Why don't we focus on that? Let's get feedback from these potential clients. Let's get their involvement. Let's make and shape our product or service so that it really addresses people's needs. And so that's an approach versus let's go like put big banners and TV advertisements everywhere, because that's just really not an appropriate way, frankly, to spend. And so yeah, so this comes down to those 3 things.
Yeah, I think that you kind of touched upon some challenges that companies have in general. you know, the spray and pray method does not work. Can you kind of speak to the challenges or barriers for some of these, specifically to fintech companies, to grow properly in light of this environment? Are there any examples that you can point to, and not to name any names, but ways that, you know, they're running into a brick wall when it comes to these things? And we'll stay with you, Kirti, and Niharika, go to you next.
Well, I do think there are some companies that have done this well, right? In the past, like, I would say half a decade. SoFi was built off of the idea of peer-to-peer and community, and really trying to solve for a problem facing most college grads, right? We end up with all this debt. So we knew that when they entered the market, they really cared about what they were trying to create a solution for. The Robin Hoods that have been developed. And then there was Betterment that tried to give people access to portfolio design that otherwise maybe didn't want to go through an RIA and wanted to go through more of the robo-advisor route. What I think they all did really well, and the reason I'm highlighting them, is that they actually stepped back and built it around community versus trying to product push. It was all about people believing in a similar system. It was not about creating, you know, audacious storefronts. It was not about, you know, we want to go shout off the rooftops. They went through a slow community building process in order to gain respect and trust. And I think that's a really important element that a lot of fintech companies should probably step back and look at. The other thing is they didn't get into the complexity of their technology. Right? It was more about the value that I was going to bring to you. So I think communications really was key from that aspect. There are a lot of companies out there right now when you look globally. And there's, you know, a whole handful of them, like from Shanghai, from the Nordics, etc., that are all trying to create this notion of banking, you know, within our fintech realm. And I think all of them are leading by community. And that's going to be instrumental to the success of a fintech brand.
Thank you, Kirti. And I guess, Niharika, kind of over to you. Like, what do you recommend to help the businesses that you manage within your portfolios grow? Like, what are some of those tactics that you recommend to them?
I think there are tactics and then there's philosophies, right? And I think part of it depends on what stage of product market fit and growth are you. So I think if you are in product market fit, I would say do not limit the use cases, because you don't know where growth will come from, but be very clear about the use case that you're testing. So I think we imagine usage of product one way, but you don't know how users will use it. So try different aspects, but make sure that you know exactly what you're trying and what the key results are for that. The second is that I think it's important to know that the way that you get your first 100 customers or your first 1,000 customers is going to be very different than how you'll get your next 10,000 customers. So what you do when you're in the acquisition mode at a very early stage will be different than what you will do when you're scaling up. So know that and keep that in mind. And I think the third, and I think Kirti touched on it, I look at 3 levers, right? The first, if you look at it from a pure investor perspective, taking away the customer for a second, they're going to look at 3 things. One is, what kind of IP, what value proposition have you created that is sustainable and people are in love with and will not live without, right? So you need to prove that. The second is they're going to look at your CAC, your customer acquisition costs. And if you're not from day one tracking that, measuring that, optimizing that, you will come to a point where it'll be hard to get a handle on it, because what they're most interested in seeing are the trends of how your CAC is going. And the third is LTV, which is your lifetime value. Now, of course, for startups, it's hard to project out, but let's just assume that there's some way that you can hypothesize what a 24-month LTV could look like. For a more stable business, it's about 5 years out, but work backwards from there to say, okay, my customer acquisition cost should be within 10 or 20% of that LTV, right? So what I'm advocating for is a very targeted, precise way of thinking about marketing and growth strategy. And overall, if I had to put one sort of circle around all of it, was there is a sentiment out there that growth at at any cost, right? Because that's what people are looking at. And I think it has changed, and it's growth at efficient cost in a way that is scalable. So I think that's very important to keep in mind as well.
Awesome. No, I love how specific that is, because I think that, you know, a lot of companies need a step-by-step way to do this and to do this well, especially in different growth phases in their trajectory. So I really appreciate, you know, you sharing those insights, Niharika. So I guess same question, since Kirti kind of answered it already, you know, in reference to SoFi and others. You know, do you know any examples of fintech brands that you see doing things right or achieving success and getting that immediate ROI? Oh, sorry, that was for Niharika. Kirti?
That's what I was going to say. I think I answered that already.
Yeah, no.
Look, I would be remiss if I didn't talk about one of my own companies, right?
Yeah.
But I will, let me take a minute. And the reason why I want to talk about it is because I think it illustrates effectively what I just spoke about, which is the sort of calibrated approach. And the company that I'm going to talk about is Magnify, which is essentially a disruptor. I look at it as what Google did to the public, any public library system, right? Where you had to go in, you had to know which aisle to go to, which book to pick up, and you had to figure out the answers yourself. And then Google came along and said, you know, you can just type out stuff and it gave you all the answers. And essentially what Magnify does is does the same thing in the world of investing. So it can take very complex and natural language, like you're talking human to investing, and give you answers in what used to take hours and days and many resources in a matter of seconds. Now, how we're bringing that to market is different, because I think, to my point earlier, we're trying different use cases, right? Asset managers, investors, advisors, but there's also a unique opportunity that we did not think about, which was actually brought to us by one of our clients, which was around monetization of the intelligence, the data that we're collecting. So I think that's a good example of sort of how, you know, bringing a product to market and thinking about growth from different aspects. The other, one of the brands that I follow very closely, they're not a fintech per se, but they're sort of a fintech analyst company, is called CB Insights. And I think the way that they engage their audience, and going back to Kirti's point around community, the newsletters are fantastic. It's insightful. There's a lot of data. The tone is engaging. It doesn't read like boring corporate speak. So that would be my example.
Awesome. No, great examples. So I guess, you know, moving on to potential shortcuts or maybe growth hacks that I'd like to call them, that brands can kind of take and, you know, especially to cut through this noise and cut through the clutter. Kirti, we'll go with you on this one. Any kind of tips and tricks?
One, I would say be consistent with your messaging. I think a lot of, especially newer companies, try to just message too much out there. So number one, try to be consistent with your messaging. Number two, bring it to life through beautiful visuals and relatable experiences. People are not going to respond to giant paragraphs and lots of numbers and just jargon, like I was saying earlier. So this is a really hard thing to do, though, for us in fintech, because it is tech and it's finance, the two most jargony endemics that exist in all sectors. So when they come together, it is a beautiful composition of lots of words and numbers. And so I think the hardest thing to do then is to translate it to visuals and to experience. Number three, have the right tools in place. So no matter how small you are or large you are as a company, there are some phenomenal tools out there to help you really nurture your client base, your prospect base. It does not have to cost a lot of money. You can go start with a HubSpot for all we care, right? It's a free platform, but it allows you to really be strategic and organize your communications. Tech stacks are really important. And if you're a fintech company and you're using manual approaches to reaching your customer, I really think you should step back and look at your tech stacks. And number four, measure. So it is so important that even if it's about, we want to generate 10 leads this week, how do we do that? Let's think about the two things that are going to do that. the 3 things that are going to do that, whatever it may be. So whether it's lead gen, whether it's about just building awareness, etc., you need to really step back and figure out, like Niharika was saying, right? Is it the cost per acquisition? Is it, your lifetime value? Can you figure it out? Can you forecast it? The form of measurement is essential because you don't want to waste your dollars. Like every dollar counts, especially as a new company that's trying to be successful for the long term. So those would be my quick tips.
Awesome. And Niharika, kind of same for you, some growth hacks, quick tips for brands.
I think I've talked about a few of them already, but let me give you 2 other things. I think the first is create intrigue about what it is that you've created. And I think the way to do that is to be generous with what you're learning from the platform, right? So I think create an effect, so create a waiting list, for example, offer free trials, publish insights that you're gaining from people engaging with the platform, however it might be, to draw people in. I think there's I want this aspect that sometimes technology and fintech companies don't get, because at the end of the day, what you are creating is going to disrupt something and is going to need behavioral change with your customers to lean into, even taking a demo, for example. So I think you have to really be careful about and plan for creating that intrigue and energy around the product itself. And the second I would say is leverage the power of the network. And it doesn't only mean, hey, go out and post on social media and Twitter. I mean, really leverage the power of your network, whether it's your investors, it's your capital partners, create initial evangelists, advocates, and do things like this, go to conferences or whatever. But the sort of proximity of the network and the friendship that you have within your network to sort of help you, give you honest feedback about the product, but also share across their network is immensely powerful in terms of having a multiplier effect.
Yeah, and brand advocacy, I would agree, is probably some of the strongest tool you can have, because it is quite authentic. So just staying with you, Niharika, this question comes from Hide Harashima. So ROI question, given the volatility, social changes, privacy, and uncertainty in the current global marketplace, how are companies rethinking their ROI for their marketing plans for a post-COVID-19 environment and beyond, while retaining trust?
Wow. I think, so let me take a step back out of and answer it from a broader perspective, right? I think the importance of trust and making people safe, right? Safety is now the proxy for trust. Whether it's, you're not going to walk into a retail store if you don't feel safe. And I think we're going to see more of that. So, and I think that comes from the brand values and what you stand for. So if there was any debate between, do you need to build brand or do you just need to drive growth? I think it's an oxymoron. I think it's a nonsensical debate. It's not Bruce Wayne and Batman. They both need to show up and they need to work together. So I do think that post-COVID, as much as the bottom lines are constrained, you have to make sure that you're communicating what the brand stands for and then translating that into immediate performance. The second thing I will say is for a lot of fintech, and it sounds odd to say this way, but this has accelerated the future. We are in the future. And this is an incredible opportunity for you to drive growth in a responsible way for any platform or any solution that you represent. So I would not scale back. I would actually push very strategically and pointedly to making sure that you get in front of audiences that, if 3 months ago they weren't ready to listen, I think they're ready to listen now.
Yeah, absolutely. This question, actually, I'll bring over to Kirti from Brian Chin. He asks, which larger or maybe mid or smaller size banks or FinServes are most likely to pivot from what they are doing pre-pandemic, so from analog to digital in the post-pandemic world?
Which companies are going to do this, or which type of companies?
I think which larger banks or FinServe companies, yeah.
Oh, so that's a really interesting question. I mean, I know we're talking about fintech in terms of, you know, these kind of younger companies that are trying to transform lending or health insurance or, you know, small business accounting, et cetera, right? Like that's where a lot of them are sourced from. But it's really interesting if you step back and look at some of our larger banks. JPM has been doing a lot of efforts in kind of really trying to pivot into the fintech space, and particularly interesting is the behemoth of a bank, BNY Mellon. I mean, they're constantly in the news, and they're trying to really apply much more modern tech, cloud-based computing, AI, machine learning, whatever it may be, but they're really trying to advance how the entire, I will call it, monetary process works globally, right? From, you know, a custody and clearing standpoint, moving that manual labor to automating it through advanced technology. And I think that we have to keep a close eye on these banks. I know there's been a lot of debate about banks will die, all digital banks will take over, you know, et cetera, et cetera. I actually think those banks are going to actually have definitely, like the Quantics and whatnot will come to a larger scale in the coming years. But I also think the banks that have the proper infrastructure as well as the resources and manpower, they're already investing a lot in the fintech space, and they're trying to change how we do business globally. And for the person who asked that question, I would definitely look into JP Morgan and BNY.
Awesome, thank you, Kirti. And I guess this next question is from Kev in LA. He applauds you guys for your great insights, so thank you, Kev. I'll take this to Niharika, because he'd like some perspective from both. So if you could shed some light on the key observations in pandemic-driven pivots or trends you're witnessing in your current portfolio or deal pipeline or industry at large, what would you say?
Do you want me to take it, Diane?
Yes, Niharika, yes.
Okay. So I think one, I mentioned that I think there's a lot of interest from the larger corporations to now seriously consider fintech solutions and to think about them more in the ecosystem. So I think there's a lot of experimentation and investigation going on. I think, you know, digital officer careers were made or broken during the pandemic. I mean, we're fully not out of it yet. So I see that as a trend. The other aspect is I think the future of practice management in terms of financial advice is significantly changing, because advice, especially advisor to their clients, whether you're part of a small firm, RIA, home office, or big platform, was very high touch. And so this challenge of how do you be high touch in a physically low touch world is hitting people in the face, right? I mean, I think overnight, even our grandparents, I'm sure the first 10 minutes were hilarious with them trying to log on to Zoom, but we got it, right? So if there was any concern about, hey, my customer is not going to be, digital, well, we're all there. So yeah. I think overnight practice management has changed, and I think it will continue to change. And so I think that's a huge trend that we're seeing in terms of the advisory to client relationship. And then, what is the role of a advisory firm or an asset manager in that context? Mm-hmm. The third, which actually is one of the, we just did a study on during the pandemic, a survey of what drives the American investor. And again, it's an AI-based sort of profiling mechanism that has never been done before. But we essentially look at what people want to invest in across 4 dimensions. And it was very interesting to see that even in the midst of the worst, crisis that we probably all will live through, people wanted to invest in purpose-related causes. So ESG investing and so on. I think there's even more of a drive now to engage in investments that create benefit for and outcomes for the larger good. So there's a lot of interest there. So those are kind of the 3 trends that I'm seeing.
So in the interest of time, I'll just have you guys, give some final thoughts for the audience. And we'll start with you, Kirti. What do you think? What's some takeaways?
I think in this very unpredictable world we're living in, and just the variety of people, needs, cultures, you know, I think fintech has a really important role to play, to some of the points that Niharika made just now as well, that we need to be open-minded and really also, though, isolate what people want, like, right? And that takes understanding your community. It takes asking the right questions. It also requires us stepping back and not making it about ourselves as a brand or a company. But I think there needs to be that element of authenticism that has to come through. And I know I'm making up words, but I'm a marketer. That's what I do. And so I do think that there's a lot of merit in being true, being authentic, and truly fulfilling people's needs. And fintech can be the solution to that. And I also think we have to be open-minded to changing how we do business. It's just not going to continue the same way it has the last decade or 2 decades. And that's going to force us to also, I think, identify some new opportunities. This is going to be a world of opportunity for us if we make it.
Thank you, Kirti. And Niharika, kind of final last thoughts.
Well, I'll close with sort of a rah-rah for the industry and for all of us, which is, I think, the larger macro opportunity. I think for too long, and I'll stipulate this and I'll say this very loud and clear, I think the entire investment management industry is inefficient because it was designed from a product perspective and from compliance, and there's a lot of dissonance in the distribution system, right? So I think what fintech has the ability to do is change that on its head and say, let's design solutions which put the end investor in the middle, in the center of it all, and build an ecosystem that over time gets better. We can't solve it overnight, but it's really changing the paradigm of the industry from being manufacturing led to really thinking about how we can drive better investor outcomes.
Awesome. Thank you so much, ladies. That was really insightful. Really appreciate it. And I guess just going to move on to the next panel. Thank you so much.
Thank you.
This next one is going to be about democratizing finance, where we're going to be discussing banking, payments, and investing. So if you would please, just going to introduce our speakers for this session. So we have Stephanie Foster, who's the founding member of Women Driving Innovation. We have Kristen Kynes, who's the FinTech Sales and Business Development at Evolve Bank and Trust. And last but not least, Jacqueline Rachelle Yee, who is the Managing Director at Macallan Capital. If you would please turn on your mics and your cameras so we can begin. Thank you all for joining us. So this is going to be a packed panel with a lot of different types of insights. These ladies are incredible. So I guess we'll start with some background questions, and we'll start at the top with Kristen. Please, share your background, what you do at Evolve. Thanks.
Yes, so I head up all the fintech business with Evolve Bank and Trust. So we have, we're a very technology-driven bank. We've got 3 different stacks of APIs with which, in servicing our fintech clients, I help walk through flow of funds, the overall product offering, just trying to figure out how our payment solutions can help facilitate these platforms to get up and launched and off to market the quickest. So we operate in the acquiring space, the issuance space, and then we have a retail banking stack as well. So very excited to be here today.
Thank you, Kristen. So next we'll go over to just kind of go down the line. Jacqueline, please share your background and what you do at Macallan and just generally.
Okay. Thanks, Diane. Hi, everyone. I'm Jacqueline. I come from a background of investment banking. I'm an investment banker and principal financier with experience in originating, developing financial instruments across the whole capital structure, from debt, equity to hybrid instruments for both the private and public capital markets. I've been very fortunate in my career to have worked at banks and institutions that are very innovatively driven. So I've had direct experience establishing fintech platforms. For example, back in the 90s with, I was in a core team of all the New Zealand trading banks coming together in the first implementation of an integrated payment system nationwide. In Europe, in addition to working on originating deals and deal making with corporate clients, we worked on a fintech platform that partnered with client corporates and the bank to monetize part of the corporate balance sheets to provide them with additional liquidity options. More recently in Australia, I took a couple of years off and helped establish and led the first year operations of a deep tech investment company where we had developed 2 supporting fintech platforms and was in design stage for a third white label trading platform with a financial institution. During that time, also set up a regulated early stage venture capital fund with the full approvals granted by regulatory bodies. So currently I am in Singapore, where there's a lot of fintech activity happening, and I'm establishing a new financial services business called MC Investment under the sponsorship of Macallan Capital. We're in phase 1 at the moment, and I have a portfolio of fintech and deep tech startups that I'm working with on capital raising, scaling them globally, looking at their business models. And then in phase 2, hopefully soon, COVID's kind of put a damp on the works a bit, we'll be looking at related funding platform. At the same time, I'm volunteering also as a mentor with Internet of Things Tribe, Deep Tech Accelerator, in Singapore. Fantastic program. So yeah, so that's kind of me in a nutshell.
Thank you, Jacqueline. And Stephanie, please share your background and for the audience.
Sure. Thank you, Diane. Thank you, FinTech Connector, for having me today. So good afternoon from Atlanta, Georgia, one of the global FinTech capitals of the world. My name is Stephanie Foster. I like to describe myself as a marketer turned product manager, turned general manager. I've been in this industry for about 20 years. And I would say that my superpower is leading cross-functional teams, which is what I've done for the last 12 years or so. I grew up in payments from running a $50 million business in the Caribbean where, yes, I did get to travel to cool places like St. Bart's in Aruba. I do miss those days. I've run teams that develop mobile apps to enable better customer experiences. And I've launched products both in the US as well as internationally. After hours, I am on the board of 2 women's organizations, Women Driving Innovation, which is local to Atlanta. And our mission is to showcase female leaders in technology. I'm also on the board of WNET, which is Women's Network of Electronic Transactions, which is an international group that provides education, mentoring, networking opportunities to support women at various levels of their careers in fintech and banking, as well as payments. And finally, on the weekends, I am a wife and mother. I have 2 little kids under 6. I have not slept in 6 years.
Oh my God.
So that is my life, basically.
I don't know how you do it all. You are a superwoman. So let's just stick with you, Stephanie. You know, what would you say makes your work most innovative? Like, what is that piece of kind of, maybe is it technology or some kind of tool that makes it so innovative that is making other businesses or making other processes more efficient?
Yeah, sure. So I'll answer this from 2 different perspectives, Diane. So one, I'll answer it from the Women Driving Innovation, the group that I helped found a few years ago. So I, along with a group of other founders, sought to solve a very specific market problem. We noticed that the majority of thought leadership opportunities seem to be extended to a certain group that did not look like us, right? A lot of networking events were very heavy, not well represented. So we saw that there was a gap in the marketplace to serve more women in technology, created this group to bring together women who are trailblazers, startup founders, investors, innovators to come together and provide networking opportunities. So that's one. And then number 2, I'm really excited to share with this group. This is kind of an exclusive. I've recently joined the 3rd largest fintech, Finastra, leading the payments group. And Finastra has a number of different lines of business, from payments and transactions banking, retail, payments, lending, treasury, capital markets, et cetera. And I think one of the things that really does make our organization truly unique and innovative is the fact that, we have this cloud-based ecosystem called FusionFabric.cloud. Mm-hmm. that basically enables fintechs and banks to come together to innovate on our platform. So, think of Amazon for fintechs and banks, where you can go in and either purchase an app or log into our developer platform to create a new app that you can then integrate with one of our core platforms or your own banking platform. So from an innovation perspective, I think that Finastra is truly leading the way for the next gen in fintech.
Awesome. Thank you so much for sharing that with us, Stephanie. We appreciate you giving us the exclusive. So I guess I will go to Kristen next on, what makes what you do most innovative? What is that secret sauce that, some of your companies are doing to get to that most efficient level that customers really love about some of the companies that you deal with?
Well, I mean, I would say as a bank, there's just really not that many banks out there that are doing everything that we are doing in the space. So I would say that our product mix is probably the best offering that we have right now. We've got 3 different stacks of APIs. So we're constantly reevaluating what we have from a product mix and trying to figure out, okay, what are the different ways that we can get money into stored value ecosystems? So what are the different ways that we can get money in and then also get money out? Because how many different ways can we start facilitating payments faster and as close to real time as we can get? So real-time payments is a big, our next product offering that we actually are rolling out this month. So very excited about real-time payments. We have direct integrations via API to both the networks. So for like MasterCard Send, Visa Direct type products for direct push and pull functionality is something we have. As far as keeping track of all the end users for all these accounts and for, maintaining the subledger. So we actually own our own system of record that we can provide out to other fintech clients too. So it's just, really understanding when you're looking at the market, when you're working with these different fintech partners, what is the flow of funds? What is the product offering? How can we best design this to start capturing a larger share of the market? So really I think that a lot of what we are doing in this space is pretty innovative just because I just don't know that there are that many other institutions out there that are acting in such a capacity from a technical standpoint.
Mm-hmm. Thank you, Kristen, for those insights. And I guess, Jacqueline, we'll go to you. You have such a diverse kind of background and you have so many different touch points with different companies. And I think, you have a great handle of some of this deep tech, fintech type organizations. So, what would you say makes some of the work that you do most innovative? Something that you would like to shed light on that really is just kind of going to be moving the way forward for us, I guess, especially in this environment?
Yeah, so some of the work I'm doing, or I try to sort of do this with select companies, and deep tech and fintech is particularly important. A lot of it is around designing a business model that disrupts how it does things ordinarily and normally. And a lot of that is driven by how do we accelerate de-risking in their commercialization, because a lot of times it takes quite a while for them to get to commercialization, get to revenue generative mode. What's the business model that will get them there, the fastest in a highly sustainable manner that incorporates contingencies, fast fail pivot points where, there's this feedback loop. If it doesn't work, how do they go back to coming up with a different way of doing things, modifying the business model, or tapping into leveraging the technology to pivot, and then coupling that's something a little bit unique. I like to think it's quite unique, is to customize capital structures that support sustainable scaling up of the business through the different planned growth stages. The idea behind that is that the capital should just be a seamless part supporting the growth of the business. And the value of this in a lot of startups are because, they need to halt or they lack capital. So the whole idea is to sort of dovetail the two together so that the innovators and technologists can focus on the tech, growing the business, becoming commercialized, becoming corporatized, and then there is capital ready to support that. And not just any sort of capital, but smart capital that will get them from one milestone to the next, whilst optimizing the value of the business. So taking it away from asset and technology to an actual going concern business. So that's kind of what I'm trying to do with companies at the moment. And then the next step is the funding. Yeah.
Awesome. So I guess let's just go right to kind of our subsets here with neobanks, Kristen. So what has been your experience with neobanks? What are they doing right? How could they be improving?
You know, I think one of the things that, you know, when you have a company that comes to you with a neobank offering, you know, I think that there are a number of things that they need to really be anticipating. And one of them that I see so many companies come to us with great ideas. You know, I think that they really need to be focusing on the economic model. You know, what is the cost of acquisition for their customers? You know, what are the different revenue streams flowing into it? You know, are they just banking off the interchange, or, you know, what really are the numbers centered around making this thing work right? And then once you do that, how are you going to get the end users to actually use it? You know, what is going to influence them to actually say, hey, look, I want to use this as my primary bank account? Because I just don't think that they take it the next step and follow through all the way. You know, there's a lot that goes into making the challenger neobank space work that I think needs to be anticipated on the front end.
So I guess going to payments to you, Stephanie, what type of problem does the payments technology industry in general that you have experience with, like, you know, what does it solve for? Can you describe certain use cases that you've seen that, you know, has a problem and a solution, and one that has tackled that properly?
Yeah, so I've worked on a number of different solutions over the years, but I'll focus on the one that was the most exciting and interesting to me, is, you know, solving the cash application process for large B2B organizations. And I know that Yali and Liz earlier talked a little bit about AI and automation. And so I'd like to talk about a use case where AI and automation was used, particularly in the payment space in the back office. So anybody here who's, you know, been in this space knows that B2B payments are typically considered to be complex, right? You're looking at multiple payment channels. So you have check payments coming in, you have wires, ACH payments, credit card payments through online portals. On one side, you're dealing with a number of ERP systems, or on the other side, you're dealing with you know, one large payment coming in that's covering multiple invoices or multiple payment lines. You're dealing with something called disassociated payments, which are ACH payments that are coming in where a payment file comes in via email, but there is no data with this payment. So as you receive it, you're not quite sure, who am I applying this towards? Is it covering invoice A, or is it covering, you know, 3 different invoices? So really the pain point associated with this cash application process is the fact that it's very difficult as an organization for you to understand what your cash position is in real time, because as those payments are coming in, you're not applying them immediately. It's taking a really long time. You're taking pictures of checks, you're PDFing information, you're capturing data through a spreadsheet, right? So it's very time consuming. It's costing a lot of money. It's very error prone because you have a human entering data in a spreadsheet all day long. So it really impacts the efforts that organizations spend day to day in their back office applying money that's coming in. So what we did is we partnered with a fintech who had already developed a SaaS solution to solve this problem, which is primarily using robotic process automation, artificial intelligence, and machine learning to automate that process, basically by connecting the tool to all of these payment channels. So configuring to your ACH stream, your wire stream, your credit card stream, any lockbox payments that are coming in. Also configuring to all these ERP systems, right? So we're speaking to both sides of the equation, the money coming in and also the open invoice on the other side, and really leveraging technology instead of a human person to read the payment file, read the data, parse the data, extract it, and then match it to your open invoice without a human person ever having to touch these payments. So I do see that type of technology as really revolutionary in B2B. I always, refer to B2B payments as the stepchild in payments, because there's a lot of innovation around the consumer, tools that you and I use to pay our bills or to, purchase something at retail. But on the B2B side, there's still a lot to be done. So I think that this automated receivables is one revolutionary technology that's recently been on the market. There are tons of fintechs out there with their different flavors of automated receivables out there. So if you are a B2B organization going through these pain points, I encourage you to look into that. It's a great way for you to save money and be more efficient and focus on your business.
Thank you. Yeah, I think I would agree that B2B is always a challenge to innovate because you have a lot of red tape, you have a lot of sort of different constituents that are involved in some of these things. So I guess this next question will go to you, Jacqueline. What are some of the challenges you see with certain fintech companies, or just in general, any challenges that you see even from the investing side? With them coming to market, with growing, with actually just making it work. What are those pain points that you're seeing that some of these clients are experiencing?
Yeah, I think for the younger companies, the earlier stage companies, there's a huge challenge between sort of, they have a very deep knowledge of the technology, but there's this gap in terms of the financing. There's a gap in articulating their value proposition in terms that will facilitate financing. So particularly now with the current situation, funding is getting sparser and it's getting more selective. So I think fintechs are facing that. There is sort of a regulatory uncertainty going on at the moment as well. So with certain type of payment companies in this part of the world, in Asia, there is still some uncertainty about custodianship for payment wallet systems. So there's a slight nuance there, and we see some fintech companies exiting certain countries because of regulatory uncertainties. I think another challenge would be fintechs that have kind of gained some momentum and are in the process of scaling globally. So implementation of their platforms in different countries globally. Some of the companies I'm working with at the moment are facing sort of issues there because of travel restrictions, because of funding pullbacks as well. So these are sort of the high level type issues, but more generally, I think with fintech starting out trying to grow and commercialize their technology, it's really the gap in the fin part of the tech that needs to be bridged, and that's where they need help. That's where they need smart capital, right?
Right. No, and I would agree with that. I would say that upon evaluating a lot of these fintechs, we want to really understand, who the investors are, who the founders are within the company, how they're capitalized. We'll actually take a look at their model and actually take those numbers and their volumes and forecast and work that through with our economics too, to kind of identify what is the burn rate, what is the future plan for capital infusions, and what needs to be done to show that this is a sustainable model for at least a minimum of 2 years, and really kind of understanding that. So that is definitely a big component upon evaluating these
sustainability. Correct.
Yeah, absolutely. And then upon even moving forward, with the product mix, I don't want to know just what this MVP is right now. What are your plans for scalability? Like what does that look like? What does your market plan look like? So
the ability to strike up strategic partnerships as well, and contingency planning, because the shit happens, right? The ability to incorporate that into how you can leverage off your technology to be agile, not not to overuse the word, but to be agile and be able to pivot, to be able to find, multiple revenue streams.
That's huge.
I think that's very important. Yeah. Some of the companies that I've been working with actually have seen growth in their revenue during this pandemic period. And this is not, companies that are Zoom. These are actually companies on the fintech, deep tech sector that have actually, utilized their tech differently to create and monetize new revenue streams and addressing the problems that are imminent currently with the COVID situation. So that's very, very powerful.
I really, to be perfectly honest, I've seen an uptick in almost every vertical across the board with respect to this pandemic. You start taking a look at these different companies and these different verticals, and with everybody wanting to stay home, for instance, and with social distancing, what are the different ways that we can start facilitating payments faster and just from your mobile device? So all these companies are coming out with new products. They have new use cases that they're wanting to get to market yesterday, because they want to be able to take advantage of this time in the economy. I think that, particularly in the early wage access space as well, I've got one client that has really seen their volumes and production just mushroom, because how can they get their hourly workers paid faster? It's something that they're looking at. I'm seeing a lot of, as far as global payments, global remittances, a lot of interest in the using the blockchain architecture and stable coins. So that is a vertical right now too.
Yeah, that's right. That's right. There are some. Sorry,
Jacqueline. I just wanted to make some room for some of the questions that we have coming through. So this next one is from Magda Lekeb. So do you, and this one we'll go to, I guess we'll go to Stephanie here for this. And do you observe appetite for other industries to join alliance between finance and tech? And, whichever way that you can kind of, see that bridge, would just kind of love to hear those insights.
Yeah, I mean, I would say absolutely. I kind of have this ongoing joke that if you're a person who works in payments, you're going to have a job for life, because people always have to pay for things. What's going to change is the way that we pay for things, right? And we're seeing it evolve from being a, cash to cash society to credit cards, debit to checks first, right? And then that has evolved to credit cards and debit cards, and now a number of contactless payment options, mobile payment options, and even, something that is now have grown to become invisible payments, like, getting into your Uber and with one click and not having to deal with, a printed receipt or signing a receipt and just walking out and being on your merry way. Or even the Amazon Go store experiences. If you've ever been into an Amazon Go store, seamless, frictionless.
Yeah.
Right? Yeah. Just download the app, walk in, pick up your sandwich, your water, and then just walk out, right? The technology automatically reads the information and you're able to walk through. So I'd say that yes, definitely there's a lot more opportunity for a number of industries to collaborate with fintech and with banks. One perfect example are, online payment tools where organizations offer an online tool for either buyers and suppliers or even end consumers like us to log on, view your invoice, and pay right then and there, either using an ACH payment or using your credit card. So I'd say that definitely fintech is fully embedded in all aspects of society. Because there are buyer and supplier relationships, and as end consumers, we constantly have to pay. We have to pay our bills. We have to pay our mortgage. If you look at wealth management, for example, having robo-advisors automatically using AI to help you predict where best to invest your funds. So definitely across all industries, I see fintech making a play.
Awesome. And this next question, I'll pass to you, Kristen. So this is from OBM. Can you provide some insights on what trends you see in the real-time payment space in terms of which companies are best positioned to which companies are best positioned to take advantage of this increasing demand for digital payments caused in part by the pandemic? Some examples are digital banks, traditional banks, credit card companies, or other payment providers like Western Union or MoneyGram. And what risks should companies be aware of who are interested in driving more cross-border real-time payments?
Yeah, so I think that the use case for real-time payments could be used for just about any platform. I think you look at all the different verticals that are out there for all these different apps and all these different fintech companies, and there are use cases all across the board. So I think it depends specifically on what it is that they're trying to accomplish and how they're going about doing it. I think that there's the competition. You're constantly seeing studies being thrown out there about, okay, here's a list of companies, which ones, how many seconds does it take to actually get the payment done the fastest? And I think I think that there's huge competition there to be able to say, hey, yes, I can deliver your funds real time. And then once that the end user realizes that they can get their money the quickest, and they tend to switch over and switch apps. I just think that this is going to be, particularly in light of this current environment, I just think that there's going to be a higher adoption for doing so. I think I think this is really going to mushroom moving forward.
Thank you, Kristen. And I think just one more question I'd like to offer Jacqueline, and that's the approach to investing. How will that change? What will investors be looking for now that we're kind of in a whole new world of digital, of trying to be a lot more high tech and maybe less high touch, but really, what are some of those things that you're observing?
Yeah, so it's actually a very timely question, because we're talking to investors today, and the investors are getting quite nervous at the moment, right? So they're going cash rich rather than holding investment assets, and a lot of it is, I think there are areas that are very interesting, would be technology that addresses some form of COVID related issue, right? And that's sustainable in a COVID-like environment. So tech in and of itself will be quite a powerful proposition, but tech that's as a platform or an asset that can be deployed across different businesses in the sector to aid in the recovery of the economy. That's going to be another aspect that's very important. So multiple revenue streams, we call it fungibility of assets in the investment world, right? Mm-hmm. Whether something is fungible across sort of different areas. So, and then more and more so, for the younger companies, it'll be looking at the founders, the management capabilities, and related to that, because everything's going data privacy, data protection, data security, it'll be risk management aspects in an investment as well. That's going to be quite important. And then jumping back on the commercial side, the ability of the technology and the company itself, the technology company startup, to partner with strategic partners out there earlier on is something else that investors will be looking at the onset. So yeah, the risk considerations and the risk landscape has changed quite a bit from the traditional investing. And what we were talking about as well as a new type of investor that actually is not VC for the first 3 to 5 years, but it's smart VC that looks at taking it on for longer. Because we're looking at digital exchanges coming on board. We're looking at different forms of continuity funding. So that's slightly nuanced. The uptake is differentiated depending on where you are.
Yep. No, I think that makes a lot of sense from an investment standpoint. And just kind of in the interest of time, I just wanted to maybe go around the room and ask you guys for some final thoughts on what are the biggest takeaways for this panel for democratizing finance. So, you know, we'll go backwards and start with Stephanie first on some of that.
Yeah, sure. So, you know, I would say that, you know, coming out of this pandemic, what we'll see is digital everything. You know, if we've learned anything, is that COVID-19 has brought the future forward. So we're seeing a lot of startups, organizations, FIs, they're starting to shift their investments across the board. It's really interesting that we have not yet seen an uptake on mobile payments per se. However, we know that, you know, contactless payments have gone up in Q1 as reported by MasterCard. So I do see that in the future as it relates to how organizations look at their payment processes and offerings that they offer the customers and also to their buyers and suppliers is going to change and move forward.
Awesome. Thank you so much, Stephanie. And we'll go to you, Kristen, on your final thoughts and takeaways for this panel on democratizing finance.
Yeah, I would just want to reiterate that I think that in light of the current environment, I think that everything in this space is going to just continue to grow. I think that, you know, even in a neobank aspect with respect to serving the underbanked, being able to find different ways to get cash out, global remittance, I think that there's just so much in the space right now that I think is really going to erupt kind of moving forward. One of the products that we actually have is a MasterCard product where you can actually go onto the app, enter your information and say, if I've got, or depending on the actual fintech, if I have money in my virtual account, but I want to send it to you across the United States, it will actually send you a text message with the nearest place where you can go and pick up your cash and get cash out of your stored value ecosystem. So it's different solutions like that we are constantly finding, solutioning for and getting out to market, which is so much fun.
Awesome. Thank you. Thank you so much, Kristen. And Jacqueline, your final thoughts for everyone.
Yeah, I have my pet topic, right? Cybersecurity, data protection, financial crimes, those types of technologies will sort of are growing in importance, particularly because I think central bank digital currency is something that will happen. So yeah, not to take up too much time, but definitely sort of financial crime type technology, know your clients, cybersecurity, data protection. Very, very important to, support trust.
Yeah, I think trust is a huge kind of theme right now for everyone. So I just wanted to ask everyone to just take 30 seconds to provide feedback before signing off on the polls. So I really, appreciate everyone's time, and thank you so much, ladies, for joining us on this really illuminating panel. Please stay in touch with us via Fintech Connector, of course. And and if, I'm sure we're gonna have many times that we're gonna get to know each other further in the future with other events. So yeah, wonderful panel. Thank you so much, ladies. You're seeing and hearing firsthand from Fintech and female leaders across the world. So thanks so much.